All right, good day to all. We are here December 12th, mid-morning. Seemed like a good day to do an update on Dash as we're seeing just a beautiful rip here up higher. Now this is a trade that we are in amongst members in the room. This has just worked out beautifully. And I thought maybe there were a few things to learn here and perhaps maybe some things we can project as to where it goes next and where the next opportunities are if you're looking to get long. Now, I've done this. I'm long been a fan of Dash, and I've done a number of videos working back through it historically, all the way back to the very first tick of the chart. Now I've got the 4-hour here up on Poloniex, so we're trading against the U.S. dollar tether since we're on Poloniex. But exchange to exchange, there's going to be slight variation, but the overall wave count will be very similar. So we just happen to be trading it on Poloniex, but some good things to learn here now. I can remember doing videos on this maybe a month ago where we were doing projections. I was talking about targets up as high as 900 to 1,000, and that seemed a little bit outrageous at that time. But here we sit with a high just put in, at least on Polo here at 920. And so I've got a hot box up here, and I'll show you exactly how I got it. That's been there for since what was this low here? So that's September 15th. So let me show you why that's there, and interestingly, where we've just gone to on the price. So all I've done here, this line down here, this is the absolute lowest low that I could get on the chart, going all the way back to the very low. I'll spare you working through all of it, but that's the lowest low. It's about $2, I think, so that I can get a projection. If we make the assumption that this swing here was our 1, and then we get this ABC into a 2. So just doing rudimentary Elliott wave projection, if I take the length of my 1, so I'm going to the absolute lowest low I can get here, I'm going up to my 1 wave, my top, and I'm projecting from my 2 low. All right, so thus the box you see here. So highest probability for a wave 3, as I've mentioned many times, is between the 1618 and the 175. Here's the box here. All right, that's been sitting up there since September 5th or 15th. Okay, so nothing radical there, just statistical probabilities. Where are we likely to see the third relative to the length of the 1 projected from the 2? Now, I am absolutely not calling a top in there on the third. We may well have more to go here. But it is kind of interesting that we popped into that level and we're seeing a little bit of a reaction. Now, per the count that I have, and this is my primary count, I do see very good potential for there to be a move higher here. But we are sitting here now at we've got an algo target here at the negative 23.6. We're in the hot box here for the third, which would be this third here. But I think there's more potential here for this to go even higher. And of course, extremes for a wave 3 if I pull all the way back out. We've got some extreme targets up here. So here's the 2618 relative to the 1 projected from the 2. So this is another box we might draw up here, between the negative 100 off of this pull and the 2618 for a potential for the third to get even higher here, which would put us, what is that, 1300? That does not seem unreasonable given the price action that we're seeing here. So that would push our 5th up here. This 5th potentially up here, and so we'll take a look at it and see how we might get there. So with these boxes marked, now I'm going to pull them off just to declutter the chart for the sake of the video here. So I'll pull that off. This is where we're long from. So let me open this up so you can see the thinking that was behind this. So here's the 1, 2, and then again we get another 1, 2. Okay, so just rudimentary analysis here. So working off of a 4-hour 1, 2, then we get a 1, 2. So we know this is a 3 of some sort, but expecting subdivision, we do get nice subdivision here. So there's been some tricky labeling here, particularly up in this area here where we had this. This was very difficult to count because it went below this low here, which had potentially been the 3, 4. But given the extremity here, I think I've got a count that works on this. So given the 1, 2, the expectation is we're going to subdivide into our third, right? So we've got multiple, it's easy to lose track here. So we've got the 1, 2 of the largest degree, and we've got that extreme target up above. And then we go again into a 1, 2, subdividing the third of the third. Okay, so 1, 2, so here's the third of this being the largest, so this is the 1, 2 of the third. We're still looking for a top of this third. We don't know that we're there yet, but we are at a spot where it's not surprising that we're getting a reaction. Given an expectation for a subdivision, we do get a sort of tricky one wave here with a shallow second wave. So you can see it. So let me pull this off so I can just open it up a little bit. So we get this shallow 2 wave here. That was tricky. So it was shallow relative to your expectation of what you'd look for in a second. All right, so there's the 1. So we come between the 38 and the 50. So it's not unheard of, but lower statistically that we would see that shallow of a 2. But given the strength of the market, that does play. Then we get the initial ramp out of this 2, so we know, so this is where an oscillator can be helpful. So looking here at the LA wave oscillator, we can see the extremes here telling us that we're in impulsive moves and that these are likely third waves. Now this is third of a third, so thus the extreme right here. So you can see up here the third of the third as we start to retrace. Here's our fourth. So this is where that oscillator can be helpful in trying to identify where you are in the count, the highest, the peak here for the histogram likely to give you your tell for your third, and that's what we're seeing here. So we get the 1, 2, then we subdivide yet again. It gets very tricky in here, very tricky. It's not as terribly relevant for us to break that down for the sake of this video. It's more about where we are and where we could be going next. So you can see here from this 1, 2, despite the shallow 2, right, despite that shallow 2, that pull is still having influence in the market because we've gone just a tick beyond the negative 618, which would be the absolute extreme for that 1, 2 pull. I've got the 1 wick there. So so we're in that. So we've got a couple of things here. So we've got that we had the negative 23 algo pull, we had the 1618, 175 hot box, and then from our 1 wave, and from the length of our 1, we are still seeing impact here as there's the negative 618. It seems to be, we've got a reaction, put it that way. So if we've got a 1, 2 here, then we go into the 3. So here is the likely candidate for our fourth. So drawing on that. So again, just doing rudimentary fib pulls here. So if I'm pulling from my 2 here, and I'm going up to here, this, granted, in hindsight, you can count this out. But you didn't know at the time. So all we know is that we can project statistically the highest probability zone for a fourth wave is between the 38 and the 50. That's really, with that little double top there, that's really the only thing that you can project is that reasonable, if I'm going to get a 1, 2, and I'm going to pull from my 2 low, looking for a relationship between the length of the 2 relative to where the 4 is likely to pause before starting up again, highest probability zone between the 38 and the 50, which is right where we go. Here's Vegas wave offering a little support as well. So it's a difficult count to get, but since we had the double top there, that was a reasonable place to make your first pull. We know we haven't completed yet if we're going to get a 3, 4, 5. So the expectation is to look for support in that area. And it wasn't easy. It wasn't an easy trade. We had a point here where it looked like we might get stopped out. It went down to challenge that pivot, but it held. We didn't, so we remain long in this. Now, there's been some partial profit taken at one of the first target. At least I took a partial profit. I've still got some running. But now looking at this, right, if with this labeling here now as a fourth, reasonable to expect that going into the fifth, we're going to subdivide yet again. So I'm going to take this down. I'm going to cut this in half. I'll go to the 2 hours so we can get a better look at it. So here this was the tricky pull. It looked like we might get stopped out there, but we don't. We get sometimes you know, you just get a little bit lucky. We were just on the other side of the pivot. We had actually entered at twice. We had 2 entries here, so we had a blended fill, an average down here. The stop was below the pivot on the expectation that the 4 held. Up we go. We get a 1, 2, 3, 4, 5 into the 1. Deep 2, right? That's deeper than you would anticipate for a 2, but it happens. So we get the deep 2, and then today now we're getting the rip higher. So given that, we can start projecting again the exact same thing that we did before. So we're going to project the length of the 1 projected from the 2 low and look for some statistical significance. So right here, here's the 1618175. Well, we're to and through that. So that, you know, we're approaching now where would the next extreme would be up here at the 2618 for that third. Right, so we know this box has significance on the largest degree. So not surprising that we're seeing some, at least a pause within this range. So let me scrunch this down a little bit. Actually, we can take it off now that we're on this degree. So now we've got a 1, 2, 3. Here's where I see the opportunity for more upside here if we're going to stay impulsive. So of course we wick off the 1. So let me take that off. So potentially we're putting in a third here. We don't know. We don't have enough data to call that a good top. We do see here that relative to the 2 from this double top here where we went for our 4, now we've hit the first target. Here's the negative 23 algo target. But we're now looking for the Elliott count in those Elliott wave relationships. So if we're going to retrace and look for another move to push higher, let me put that in a different color. Take that to white. So again, guys, it's the same thing over and over again. So from our 2, just as we did down here, we're going to pull from our 2 to what is well, if I can get it highlighted, there's our 2. Potentially, we don't know yet. We don't know that's a hard pivot yet, but it's potentially, given that reaction, potentially we're looking for a 4. Where's the highest probability for zone for a 4? Between the 38 and the 50. Just as so, look, here it is. Here it is down here between the 38 and the 50. So we're looking to do the same thing. Here's the 38 and the 50 here. Same idea. Now we're on a 2 hour, so we'd like to see a little 3-wave subdivision to come down for that 4. That's ideal if we can see that on a lower time frame. But we can look at this and say, okay, if we come into this area and we get a little 3-wave, let's go down to the 1 hour and see if we get any signs of some subdivision. So potentially, if, and again, we don't know, but if we're going to get a little pullback here, we'd look for this, as I've shown you guys many times. So we'd be looking for something along those lines. Let me lower that degree. Let's go there, and I'll put the wave on it. So that's what we're looking for. If we can get any kind of subdivision, that would be ideal. Looking for a traditional, right? So we've seen exceptions to this because we've seen a lot of this. We've seen a lot of this in crypto. We've seen the A and the B, and then a shallow C or a double bottom C. We've seen a lot of that. So we don't want to be, dogmatic about the expectation that the C must go below the A, because we've seen a lot of this in crypto. But this would be the ideal play. And again, until we get a hard pivot here to work from, we don't know that this is where we're pulling from. But this would be the ideal roadmap to see coming into that 4th. And of course, we'd put since we've got 3 good pivots to work from, we'd put a pitchfork on this. And, this would not be surprising to see the A wave come down here, revisit the median line, a little push up here. The B wave is the failure to get to new highs. Roll over, we come back to the C. So there's your roadmap for, at least for the dollar tether on Polo. So for potentially a 4 with an expectation that we go up and put in a 5, right? Because we would get a new algo target. If we're gonna follow this roadmap, right? It's all just projection right now, but that's a potential roadmap. We come down for the ABC, go up one more time, potentially put in the 5 there, which could be the 3 high of the larger degree. You see that, right? So here would be 1, 2, 3, 4, putting in the 5th. Right? And it's all just projection right now. We don't know. We just react to what we see. But certainly that would imply an impulsive 3rd wave. So next opportunity is to be looking to get long here in that same pocket down here between the 38 and the 50. 38 and the 50. If we can get subdivision, it wasn't easy here. Wasn't easy, but you hit your high probability zone. So that's paid off. So if you're waiting to get long, so this would not be surprising to see this come right here, maybe the outside edge. Here's the lower parallel of the pitchfork. That would play nicely. Here's our wave 1 high. We want to stay above that. So if you're getting into the trade there, you can be, you know, you can, if you, it's just for the sake of the exercise. We could be either on the other side of the 65 because we could finish. We could finish with a diagonal. If you want to be super tight, you go just on the other side of the wave 1 high on the assumption that we don't overlap that. But I would give that a little more room. So maybe this is a question you have to ask yourself relative to your account size, how much risk you can afford. If the distance from entry at the 50 to below the 65 is going to be that's how you would determine your trade size. So what can you afford there so that if you do get stopped out, if the count invalidates, that's not going to do too much damage. So that first risk-reward analysis should be something that, as I often say, is going to be a jab. Don't take a knockout punch here. No reason to do that. So you don't want to be, going heavy here enough to where if you get that reaction, so you're looking for it to pause there, you're looking for a reaction, looking for the opportunity to get long. If we're going up, there will be time to add to it. So don't load the boat on the first entry because there's always going to be opportunity. If it's going to follow this roadmap, there will be opportunity to add to that position. Now you're adding in profit, right? A little house money to make the ad all that much sweeter. Right, so that's what I see there. I think there's good opportunity for us to see higher prices there as this count certainly does not look like it's completed here. All right, so how am I on time? There's 16. I thought I'd just do I'll show you something interesting. This has been very tricky, and I will tell you that I've taken multiple stop outs here trying to get long dash to Bitcoin. So here was the Bitcoin scream. So in the spread against it, this just drove it down. So there were a couple of times. Where we got stopped out because it looked like this was going to play ball, and we had a 1-2, and we were going up for a 3. This ultimately now, with all of this data now completed, we can still call this a 1-2. Now that's extreme, granted, that's extreme, but we don't take out this low. So if we look at the long-term count here, you could call it, you could call it a double bottom, but technically, from Elliott speak, as long as we don't overlap that low, we can still play that as a 1-2. Now, I just show you this just to kind of remind you that this is not easy, that I get stopped out all the time, guys, right? So I don't want you to, a lot of times I do these videos and I don't want you to get the impression that I'm always right, that I don't get stopped out regularly. And that a lot of times the count is changed and rearranged, and you just have to adapt to what the market is offering. So this was a very reasonable expectation. So if I just go back to this, and this is exactly, and you could find this in videos that we did, within the last 3 weeks. So this was not unreasonable to think that we had a 1-2. And then coming out of that, we had the potential for this to go impulsive. That was the trade we were trying to get. Now, in hindsight, now we can label this. We know this ends up being an ABC. But there were a couple of different trades here where it was very reasonable to anticipate that we were going into, so this being one, potentially we thought this was the 2 over here, that this was going impulsive when we were off to the races in our third. That's not what we got. So from here, now you could make the case in hindsight, with the benefit of hindsight, of course, that the break of the 6.5 here was a bit of a tell. But look at the reaction. So from here, splitting the difference here, which we did, was which is 0537. We got up to 0802. I mean, so there was plenty of opportunity to turn a profit there. And as I recall, there were a couple of good. I mean, it was all very technical, but sometimes it doesn't play ball. We got up there, and then I remember this. Remember, you've got a fib fight coming both ways, right? We go right to the 786, right? So A ends up being this ends up being a B wave, right? In hindsight, we can see, oh, okay, it's a B wave, right? And then the market comes back down. So here was the target down here. So let me show this to you again. So this is, again, just showing you that there is no easy money here, but it's the consistency. It's the consistency of doing the same thing over and over again. So even though you get stopped out 2-3 times, eventually that same consistent approach, trading those technical probabilities, will reward you well and offset the losers you take along the way. So given that we had this as potentially a 1-2, and then we went down again, so it was really not unreasonable, given this 786 with the target here, that this was a buy down here. So this was the last place that we tried to buy it. So the first one was right here. So when we went to this, we came back down to the 618, potential for a double bottom. You can see why we entered right there. I'm going to let me get that back. Let me get back here. So you can see what I'm trying to show you here. So you see the reaction. So here was the reaction. Do you see this? This is why we entered the market, right? So here was the reaction just ahead of the 618. We got that little pop. Made it look like we had a decent trade. Stop on the other side of the 65. So we get that little pop, and then Bitcoin rips and it rolls over. We get stopped out. Okay, small loser, right? Put it in context. Very small loser, right? Never put yourself in a position where any one trade that doesn't work out, despite that looked great from the start, boom, get crushed again. Then we bought again, and I'll show you why. Then we bought again, thinking that we had. Well, let me put that, give me a second, put that on shift. So we thought possibly, not unreasonable, that we had this. Do you see this little box here? So we had what looked like confluence. So it appeared as though we had an A, B, we're coming in for the C down here at the 786. Would not have been unreasonable for that 2 to be there. So you've got a confluence zone, and I may have talked about this in a video, that we had the 786 and the -23 from this pull here. So we had, and at that time, what looked like the lower parallel to the Schiff pitchfork. Looked like that was a reasonable trade to enter, and I'm going to pull some of this off here so we can show you this. So we enter here, looks good, gets off to a good start, stopped out again. So there's 2 in a row. So now you're thinking, I don't know about. You can see the reaction here. Let me blow it up again so you can see what happened. So here was the reaction. Right here. You see this? So we had this little pop right here. Looked like we're off to a good start. So not a bad place to tighten the stop because we're trying to pick the low. So whenever you're trying to do that, you want to be, you don't want to give it too much room. So we were in the little pocket. We got just a tick or two in front of the -23. We get a pop. We think we're, good start. So all the confluence zones, well, everything we look for was there. Lower parallel, -23, 786. It looked like that was a reasonable spot for the 2. The trade gets off to a start, and then we get rolled over again, and it spikes down. Okay, that's 2 stops in a row. Actually, I think that was 3. I think we had 3 stops in here trying to get long dash to Bitcoin. Here's what interestingly, here's what we end up with. So if you take that and you go, well, what the heck? That looked so good. What could it be? Well, the first thing, of course, you got to do is go from the Schiff to the original, and look where we pivot to the tick, right to the median line. So talk about a nice corner pocket trade, right? And we know Andrew's median line principle number 2, that the market will often pivot, if not exactly on it, very close to the median line. It literally ticks the median line here and then rips, and then from that rip. Right, so the structure catches it, right? Just perfect example of it. And if you didn't know to draw that, I mean, you'd have no idea why it's stopping there. So the geometry gets it, the tick of the median line, algos rip it off of there, and now what do? Okay, so from that low, right, here's where you've got to have the discipline to go again. Where do we go? Right into the box, right between the 618 and the 65, right into the hot box, and look at the reaction we get here. And where's their target, right? You see that? So there's the negative 23. So they're already taking profit off of that. But, you know, you see, we bought it here. We bought it here. You've got to be willing to go again. You've got to be willing to go again. It's that discipline, because what do we have here now? Most likely, we've got a 1, 2, and we're putting in some sort of a 3, 4, 5. Right? So if I raise that degree, right, that's most likely what's happening here. But algos, they don't trade the Elliott wave. They're just trading off of that fib pull. So there's their entry right there. There's their exit on the negative 23. Now, they may let some run. That may be a partial. But that's why you're coming up to the negative 23 and seeing a reaction. Now, keep in mind, as I tell you all the time, it's always a fib fight from both directions. So pulling from here to our absolute low, there's going to be some resistance. That's why we've got this wicked off here. So this prior low potentially creating some resistance, but note here, from the swing high here to the low, that's right at the 50. So don't be surprised if we see a reaction there. Now, how will we know where we are in the count? Well, if this is truly going to be a 1, 2, well, we know we've got to get at least 100% the length of the one wave. So this is going to be a real tell right here. Do we get through that resistance? Because there's a very real possibility that algos will just sell it again at the 50, looking for a new low. So that's why you certainly wouldn't want to be a buyer here looking for a breakout, because you've got this resistance that you're going to come. So you've got structural resistance. We're sitting right here at the upper parallel here. So we got that to deal with. Then we've got up here, we've got the 61865. So you've got this resistance to get through on the other side, right? Because remember, we hit it here, 61865 pocket. You got to get through that resistance. Where's the most likely target for the third? Here's that box right here. So this is where you can get a handle on what are we doing. Are we going impulsive? Do I have a third wave underway? If I've got a third wave underway, then the high probability target for that is right here. There's my 1618175 window, which coincidentally there's the 786, and we saw that. Saw it turn on the 786 previously. So this would not be surprising at all if we're going to get through this, through the 50, through the 100, through the 618. This would be the next place where you'd look for a reaction, and from that reaction, you're going to look for the 38 to the 50, just like we do every single time, whether we're stopped out 3 times in a row or not. It's the consistency of the approach that is the key to the whole thing. And money management. Don't put yourself in a position where you can get knocked out in any one trade. Just there's never, ever a reason to do it. Never. If you do it, you'll get punished, because the market punishes mistakes. All right, let's see. That's 28 minutes. I better wrap it there. That's longer than I meant to go, but there was a lot to see there. And when you see a pivot at the median line, pay attention to it. Pay attention to it. All right, guys, I'll wrap it there.